What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the technicals on AMC on some of the longer time frames to just kind of give us a little bit of a bigger picture of where we're at. And then we got to talk about some really important stuff right here. So the shorts are facing a very interesting predicament right now. There is only so far that they can try to manipulate this thing down. We are seeing this on some of the data right here, and they're overcooking themselves. We have seen them start to do it on GME, and we are really starting to see it on AMC right now too. And if they keep going on this trajectory, we could be headed towards a pretty significant event. And I'm going to break all that down for you guys as well. We still have to take a look a little bit at the options chain. There is still 0 shares left to borrow according to Stockholm Tracker on GameStop, and today we had an all-time high on the reverse repo operations. The RRP hit over $2 trillion. Now, what this essentially means in short is that there's either not enough collateral to basically go around, which is going to tie into these DTCC collateral haircuts, which is going to basically put more pressure on these institutions anyway, and there is way too much cash in the banking system at the current time, which we already know. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you have seen the amount of success that people have been having with the 1348 trading strategy. We have more proprietary trading algorithms coming to you guys in the very near future. We do over 40 private live streams every single month, the fastest real-time alerts on over 850 stocks with the algorithms, and about 450 on the single stock alerts. If you guys are interested in taking your trading to the next level, make sure you check out that link down below. So AMC closed the day today at $11.58, down about 45 cents on the day, even though the overall market was trending up, which wasn't the best thing to see. Now, again, on the shorter time frames, we're going to see sometimes the market go red, AMC go up as the market is red. But again, on the longer time frames, if the market ends up starting to trend up, we're most likely going to see AMC follow it, just like we've seen many, many times in the past. Now, looking at the 4-hour time frame on AMC right now, what we're looking at here is still, we're waiting on that 1348 cross to the upside here, closing candles above the 200 EMA. Then we could start to see some of those bigger candles really start to fire off to the upside. So that's kind of what we're looking at right here. We're hovering just below the 13 EMA on the 4-hour right now. We got to kind of recapture these levels right here, and then we could potentially start moving back to the upside. Now, let's get into this situation with these shorts and what issue they're seeing right now. Now, right now, when you think about the shorts having a problem with the price action that we've been seeing on AMC, you're going to be like, hey, STV, you're being crazy. They don't really have a problem. Now, in terms of price action, you are correct. But in terms of going forward, what they're doing right now is wildly reckless. The shares on loan right now is at an all-time high of 159.81 million, but today, on an SSR day, when they're only supposed to be able to short the stock as it's going up, they borrowed 6,150,000 shares net. Total 6.77 million shares. Now, what this is going to do is lead to an enormous amount of scarcity in the securities lending market. These cost to borrow rates here that we're seeing down here, the minimum 0.74, average 3.62, maximum 6.56, so it is stepping up. Those rates are based on supply and demand. We can see the demand is very high, that 6.77 million shares are going out on loan, but the supply is decreasing. This is the highest we've ever seen the shares on loan for AMC right now, and it's continually going up. We're going to see the short interest start to increase as well. We're at 22.54%. And again, some people were asking today if this is the highest we've ever seen the short interest on AMC. It's actually not. If we scroll back, let's see, around May, May of last year, June of last year, we saw about 24.5% short interest as reported by the exchange. We're very close to that level right now to seeing those all-time high numbers. Now, here's what happens going forward. The cost to borrow rates are variable. So as you take out shares on loan, if the rate changes, you have to pay the new rate unless you can somehow figure out a way to lock in that cost to borrow. But if you can do that, you're most likely going to be paying a higher cost to borrow anyway. So we're going to see the existing short positions start to have to pay a little bit more. Now, here's the thing. If they can no longer push this stock down, we saw it shoot down into the $9 range, then bounce right back up. If they have enough difficulty trying to push this thing even lower, it doesn't make sense for them to hold it anymore. So we're starting to get into that type of phase right here. And if we take a look at GME as well on their Ortex data here, 26% max cost to borrow, 20.29% average. This is absolutely insane. And 24.73% estimated short interest. The numbers that we're seeing on Ortex right now are pretty interesting. Now, again, a lot of this is just reported data. It's being calculated by Ortex. It's probably a lot higher than what we're seeing, but we are definitely trending in the right direction with a lot of this data that we are seeing right now, and is going to end up causing some significant issues for the people betting against these two companies. Now, coming over to Stockholm Tracker really quickly, we are still showing 0 shares left to borrow on GameStop right now, which is one of the reasons why we're starting to see the cost to borrow start to really step up, because on this one broker that Stockholm Tracker is getting its data from, there's no more shares left. Now on AMC, there's about 500,000 shares. When I was kind of setting up this video, this did say 450,000, so it did go up a little bit. So there still are some shares to go out on loan for AMC. So we do still have a little bit of ways to go in order to see some of those numbers start to pop up. Now, the option chain, nothing too crazy right now. 3,959 call contracts in the money, 94,000 out of the money. And again, more puts in the money at the current time. So they're going to be net short in terms of the market maker hedging. Now, let's get into this reverse repo situation, because I think this is very interesting. And a lot of people have been very curious about these types of kind of financial transactions in the past. So first, we got to kind of take a look at what happened today in the reverse repo market. So it's in this is actually in billions right here. So you see 2,044 billion. So this is going to be about 2 trillion, which was accepted in the reverse repo facility. Now, what is a reverse repo? So what happens in these situations is the Fed is going to be giving these banks treasuries, and the banks are going to be giving the Fed cash. So they're essentially loaning the Fed cash, and in return, the bank or the Fed is going to be giving the banks those treasuries. Now, these types of transactions signify some very important things. We should not still be seeing these numbers at the height that they are. When you take a look at some of the articles at the reverse repos, when they started to get over 1 trillion, essentially what they were saying is that once we get a little bit of a notice on what the Fed is going to be doing with the tapering of their asset purchases, we probably should start to see these reverse repo numbers start to come down, but they haven't. They've doubled. Now, why would this be surging right now? Well, one, either there's too much cash in the system or not enough collateral. So the banks are swapping out their cash right now for collateral. Remember the amount of derivatives exposure that we've seen in the overall market. It's like $137 trillion total in the notional amounts of derivatives that we are seeing in the United States stock market right now, with Goldman Sachs having a wild leverage ratio. Now think about this right here. We've seen these DTCC collateral haircuts start to come in. The most recent haircuts didn't really change a whole lot, but a lot of these things are taking significant haircuts right now. We're seeing 100% here. MBS issued by a U.S. agency and U.S. government-sponsored enterprise. Mortgage-backed securities, 100% rated below a pretty high level right here, are cut completely. So these banks and a lot of these financial institutions are going to be using these treasuries that the Fed is giving them as collateral. So we can see right here, interest-bearing United States Treasury securities are only getting cut previously by about 2%. The zero coupons were getting cut a little bit more depending on the time to maturity. But again, when you see the banks needing a lot of this collateral and the Fed needing a lot of this cash, that is cause for concern in the overall market. Remember, everybody is over leveraged at the current time. If you guys watched my video from last night or Saturday, we were talking about those 2,300 firms that are facing those forced liquidations over in the Chinese market. We've seen many institutions in the United States start to fall. Melvin, to name one very specific one, who has over-leveraged themselves and now has to close their doors. There are things moving in the market. And remember, we pull up the bond market, the 10-year Treasury, and TLT almost every day on the stream. And these are going to be things that we need to keep a lookout for going forward. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I will see you guys in the next one.